Hey there, random internet strangers. It's Random Crypto Guy with the worst crypto channel on YouTube. Yay! Da 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 da. We spare no expense here at Random Crypto Guy. Is it doom and gloom for Bitcoin? People are panicking. Oh, hide the children. It's raining dogs and cats. Coronavirus everywhere. What are we gonna do? No, it's not really like that at all. Let's go to the chart real quick. Whoopsie. Here we go. I went on Tradingview and I found an indicator that I liked. It was really interesting. It's this green and red thingy. Well, everything green and red. The only thing I added to it was my berry support resistance. You can actually take those off because they kind of actually get in the way of things. Take that off so you can see a little clearer. What I like about this is it's a very simple color-coded indicator. When you start seeing, let's say, take for example over here, you start seeing this start to turn red, but not completely, still in the green. These are good buying opportunities to buy for short term. If you've done this, like right here for example, boom, you would have had a nice little trade right there. Same thing, you came in here, that would have been a really good trade right there. Here's another one. You can see how it picks it up pretty well. But what you want, so those are for the short term. For the longer term, if you're in this for the long haul, this is when you want to look for when it goes into deep red. And it's well into deep red. So when it's well into deep red, this is the day, these are the times where you want to be buying Bitcoin on the daily. Whether it's $10 a day, $1 a day, a dime a day, whatever your schedule holds to hold for the long term. This is when you want to start piggy banking. The only place I saw where it might have been an issue was maybe here. You would have filled your piggy bank at 94, so you might not have seen that. But as I said, you don't want it. This is when you want to start your daily accumulation, and this is a daily candle, so you would have only accumulated 1, 2, 3, 4, maybe $5 or $50 or whatever. Whatever your daily limit is, whether it's even 10 cents, you just at, that would have been 50 cents. And then you get back down in here and you look for these, and then I add the support and resistance levels to let me know where I would place my limit orders. So I would place support. Your support was like maybe down here, so you could replace your limit orders here to buy in, and then bang, get it at the lowest possible price. And then just do that on a daily basis. Try to look for a nice place to stick your limit order. If it doesn't trigger, it doesn't trigger, and then you just hold it for the next day. And you just collect daily, whatever your daily dollar cost averaging is. But once it turns even slightly green, that's when you want to start backing off on your accumulation phase. See, it was pretty mixed up in here. Yeah, this is that China news, I guess, and then it came back down, and then we started accumulating in here again, right in here, right in here, and I put my biggest chunk right about here, and here is where I put the biggest chunks of my money, was right in here. And then I've been accumulating, buying the dips slowly each time this turns red. This turns red. And it's called TSP. You just type it in the thing here. You go to public library. You go to the search. What was it? TSP. TSP. Where is it at? TSP MA. I don't see it in here. TSP. No, I'm not finding it. I'll have to go back and look for it, but I know it's in the public library and it's free. It's a free indicator. Just thought it was a really cool indicator on TradingView that allow you to, using a very simple color-coded system to accumulate and buy into Bitcoin. Because I don't see any reason to short Bitcoin. I showed you that in a couple previous videos. Why that I don't think is necessary. But moving on. On to Tezos. Why do I like Tezos so much? I talk about it, but I think it has the potential to take over Ethereum, overtake Ethereum. Now, while Ethereum has got the head start, what Ethereum lacks is its governing process. And what Tezos has is a self-amendment and upgradability through people holding proof of stake. And so they're already proof of stake, and that's what Ethereum is trying to achieve, is proof of stake. I think they realized that mining was a mistake, and that unlimited mining was even a bigger mistake. So I think that's why they are going over that. And I think Tezos has seized upon that opportunity, and they've already got a product out that's already going to beat this Ethereum 2.0 or Serenity coin or whatever they're going to call it, that proof of stake coin. There already is one. It's called Tezos, and it had a rocky start in the beginning, but I think Tezos, they put that all behind them, and they are now in it to win it. And as I said, they have the smart contracts, and with Chainlink, being able to link up to it to bring in Oracle information from the outside world to create these smart contracts. I think Tezos is unstoppable at this point. You have the proof of stake, and what I like about the proof of stake is that you become a node when you hold like 8,000 Tezos, and so that you can submit suggestions to amend the code, and then they get voted on, and then if there's a majority vote, I'm not exactly sure whether it's supermajority or whatever. I think it should be a supermajority, but that's what's great about it. What else is great about it is that even though if you don't own 8,000 Tezos, maybe you only own 1,000, then what you can do is delegate that to somebody who is a node, and then you still get the 5% staking, and you still you go with somebody who basically is your representative, and now it's truly a republic where people will go and then they get to vote. They don't have to vote because our representative, whoever they get to vote. You get to vote personally on who your representative is. So it truly is a sovereign republic. So that's what I really like about it, this formal governance process. You got to read through this. And then, like I said, which cases are well suited for Tezos? Pretty much everything that Ethereum does. And I think it'll probably do it, would do a better job than Ethereum. You can read through this. There's a lot to read over here. And then it also has military grade encryption, and so to resist bug attacks and hacker attacks. So I just think it's got everything, and I think it has the ability. Go to the chart real quick. See. Just go to Kraken and don't worry about it too much. But I mean, look at the volume coming and kicking in here. Kraken was, I believe, the first to put it on its exchange, and then Coinbase followed suit thereafter. And with the proof of stake, and we got a nice support level going on right here. It's all in the green. I bought in somewhere around here just before it took off. And then I bought some earlier when I got onto Coinbase, which was right around this area. So I got in at a good price. So I'm sitting on, and I'm just waiting for this next dip. If this goes down a little bit lower, I might accumulate some more, hopefully. I think it's going to take off like a rocket. There's just too much going for it. The way that it's set up and everything, it's a thing of beauty. I mean, look at this nice green candle here, this nice volume candle. Nice volume spikes here. Probably some selling off for some traders here, but nothing too dramatic. It just looks good all over. I think it's unstoppable myself. So, moving on. I was going to go, I talked about, I know not a lot of people watched my updated video, but I saw a lady was hocking her wares for a Forex trading system. It was a reversal trading system, and she wanted $450 a month, and I'm going to teach it to you for free. I only got 5 minutes right here, so 4 minutes, so let's blow through this here real quick. This is basically what she does. Very simple system. What she does is she looks for confluence. This is these lines here, these are daily fractals. And if you put a bunch of daily fractals together, you get a weekly and a monthly fractal. So that's going to improve its strength, and it's not a specific line. That's why I use demand zones as opposed to lines, because you can see that these don't line up, but it is a solid area of support that's starting to give way because this new fractal formed up here, this daily fractal here, and then the boxes are the demand zones, the 4-hour demand zones. And what she does is she looks for confluence between the daily fractal and a 4-hour confluence of a demand zone. So we get that, and then she'll look for return to that area. This probably formed up, taking a look at it right here. This came down. That was a down candle. This was an up candle. So this is an area of return that she would look for. When price returned to this area, she would look for a rejection in that zone. And once it got there, she would go down to the 15-minute chart to look for entry. And then she would just zoom out a little bit. Like if this 4-hour zone formed up here, where this demand zone formed up here, which is possibility. I don't know. It shows it formed up here, but I'm not real sure if that happened. I think it might actually formed up over here. This would have been an opportunity of an area to set a limit order and wait for price to dig into this demand zone and then take off. And then, bring up your stop would be, I think she uses the 15-minute so that she can keep her stops small and make her profit targets, go with some exit strategy. Whereas let's say, for example, I got in here and then it took off here, and then I would have exited on my second Heiken-Aishi candle, which, let's zoom in a little bit, which would have been, in this case, right here. I would have exited. So that would have been, let's see, I would have put my, right here, 35 pips. Not bad. And then here's another opportunity right here. And as you dig in, if it's showing signs of strength, you want to bring your limit orders up a little bit higher. So let's say I got in right here. I would have got out. I would have exited here for 13. But if I would have held on, maybe I had a better exit indicator. Maybe I could have got out here at 45. Or probably closer to maybe here somewhere, around 37. Depending upon what type of indicator you would have used. So that's basically how our system works. And then so she would use the 15-minute chart, and then using calculations to be able to fine-tune it. She uses a 1% risk. So whatever 1% is on her ATR, I would probably